Welcome everyone to today's webinar, Going Digital with Commercial Account Opening, co-hosted with ProcessMaker and Nextsoft. We're just going to give it a few minutes for more attendees to join, but we'll just be getting started shortly. Welcome everyone to today's webinar. We're just giving it a couple minutes so everyone can join. All right, I think we're ready to start. Welcome to today's webinar with ProcessMaker and Nextsoft, Going Digital with Commercial Account Opening. I actually like to start off by introducing you to Ted Lynch from Nextsoft, who will just give you a brief introduction of Nextsoft.
Good, I guess, afternoon. Nextsoft, we've been providing solutions for account openings, loan originations, deposit originations, for lots of different account opening processes into about 30 different cores currently today. We've been doing this for about 25 years. Through our software, you will get a complete boarding solution, and there should be no manual intervention that is ever required. And for a deposit account opening, it will be real time as long as the core provides for that.
Excellent, thank you, Ted. So just to go over some housekeeping for today's webinar, I'm going to start off by introducing you to Peter Brown, our speaker, who's going to touch on commercial deposit market share, deposit application abandonment, and customer experience before we go into a Q&A. So with that, I'd like to introduce our speaker, Peter Brown, Vice President at ProcessMaker. Peter's worked with community banks for over a decade, helping with commercial lending, deposits, treasury services, and many more areas. Thank you, Peter.
Well, thanks, Matt and Ted for joining. We're really excited to get into the material today. So thank you everyone for spending a bit of time out of your schedule to join today. What we wanted to start with is really hear from you guys, the audience, and set kind of some of the stage for our conversation, make this as conversational as any webinar can be. So I'm going to have Matt launch a quick poll question for y'all so that we can really make this a somewhat interactive.
All right, so everyone should have the poll question now. So the question is, which services do you offer online account opening for? So we'll just give it a minute for everyone to have a chance to vote. Give it just a few more moments here. All right, so for which services do you offer online account opening for? The leader is retail account opening at 40%. Second would be commercial account opening at 30%, retail LOS at 10%, and commercial LOS at 20%.
Interesting. So I guess you know, interesting to hear from you guys. No surprise, as I talk to kind of folks around the country, with a community bank, a credit union, even some of the regional banks, retail account opening, deposit account opening, by far and away is the thing I hear the most, where banks are comfortable with and have a solution for online account opening. But you'll notice obviously that as with many things, it drops off pretty quickly around some of the other services. So really want today to talk a bit about the commercial side of that, where obviously commonly we're allowing consumers or retail customers to open accounts, but on the commercial side, for a variety of reasons, we've kind of kept that more paper-based or maybe face-to-face. Maybe it's still a business banker doing all the work, or maybe it's a treasury management team, maybe it's a commercial lender in certain cases, et cetera. So we'll want to start by talking a bit about market share of deposits, and particularly focused around the community banks. So there's, if we think about a typical community bank, might look something like this, where, kind of that foundation of what you do is really all about deposits and loans. Of course, other services might be there as well, some wealth management, maybe private banking, depending on kind of your organization. And of course, the pillars of both retail and commercial. But in reality, the picture looks often much more like this. Most community banks are more heavily commercial, sometimes almost exclusively commercial. Of course, there's the occasional community bank that does a lot of retail on their balance sheet. But what's interesting, if we look at studies that have been done by the FDIC and the SBA, even though community banks, of course, are much smaller in terms of asset size than the mega banks or even the regionals, they still comprise about 42% of all business loans in their market. So, that commonly surprises a lot of folks who aren't kind of familiar with the banking landscape, peers of mine, friends that I talk to, where they've never even heard of a community bank. They walk by the branch every day in where I live, downtown Raleigh, and they've never even noticed that there's a local community bank on the corner there. And yet, in the commercial world, they still have a huge penetration of the market and service clients. And I think there's a lot of good reasons for that. But what's interesting on the flip side, community banks only hold about 22% of the deposit market share. So a much, much smaller market share around deposits. So there's a couple vendors out there, Novantas and S&P, who have done some studies on this. And what's interesting, even during COVID, while we've seen a massive expansion of commercial deposits really across the board, somewhat due to PPP, somewhat just due to businesses aren't sure where to spend their cash. But the big four have seen an annualized growth rate since COVID of 88%, which is pretty insane if you think about it. That's a huge amount of growth. Regional banks are seeing a little bit less than that. So whether that's, depending on your region, maybe it's a Bank of the West, maybe it's a Huntington, a Synovus, a BB&T or Truist now, whatever that may be. But they're seeing 8 to 20% kind of in that median spectrum. But interestingly, community banks have only seen on average across the country about 8% in terms of commercial deposit growth since COVID has started. So something is, obviously a lot of things have changed here with COVID, but for whatever reason, businesses are still kind of showing they're going to the mega banks primarily for their banking services. The Federal Reserve has done a pretty good white paper called "Do Small Businesses Still Prefer Community Banks?" And certainly on the lending side, the answer is yes. But one of the key thesis statements that the Federal Reserve white paper makes is that business clients choose to deposit with big banks over community banks because of relative convenience. And that's a pretty stark, I think, thing for us to digest and think about. What is it about the convenience factor that they're willing to bank with people they may not even particularly like? So case in point, I talk with a lot of folks, whether it's banks or business owners. A good friend of mine is a small business owner, and he has banked with Wells Fargo for a number of years, and primarily because of that convenience factor. And it's not so much that there's a branch next to him. It's not so much that he can go to ATMs everywhere. It's really about that online and mobile experience. So for him as a business owner, he knows he can get on his laptop and manage his bank account very easily. They have plenty of services there, whether it's funds transfer or whatnot, in one place, easy to use, and with modern kind of systems. But on the flip side, with PPP, he actually he doesn't really like Wells Fargo. In fact, he's had a bad experience with Wells Fargo, and yet he still banks with them. But on PPP, because of his experience with Wells, he decided to take out a PPP loan with a community bank, and he's really loved the relationship and the experience that he's had. But he still banks with Wells Fargo. Another example, my sister actually is in a small kind of community in Texas, and one of the dynamics that she has said as she's started banking with the community bank, when she walks in that branch, they immediately say, "Hey, Mrs. Wilson," and immediately, there's that relationship, that connection. And so it's not that community banks don't have the ability to gain and retain clients, but they're often kind of behind in terms of the relative convenience. And so I think that if we think about consumer trends, certainly a lot more has, say in the last decade, gone to shop local, eat local, things like that. Let's see, what that can look like with bank local as well. So as we transition to maybe one of the key challenges that these business owners find around banking with these community banks, I'd like to open up for another poll question. Matt?
All right, thanks, Peter. Launching the poll now. Question is, what is your application abandonment rate? I'll leave the poll open for a minute or so everyone can respond. All right, almost there. Just give it a few more seconds. All right, thank you, everyone. So the results of the poll I'll share now, but clearly the winner was I don't know. So I'll turn it over to you, Peter.
Yeah, and that's a very, very common answer that I hear from banks that I talk to around the country. Kudos to the person who has kind of less than 10%. That's pretty phenomenal. We're going to now kind of talk about application abandonment. What is it? Why does it happen? And kind of what's driving that. So let's kind of transition to kind of the point number two. So, what is, community banks compared to the lending side of the house, the deposit side, just not getting that same kind of market share in the commercial space. A lot of the driving factor of that is convenience, as we've discussed, and I think on the flip side, a lot of the challenge is seen through the abandonment rates. So if we look at traditional channels, we've talked about this a little bit, but commonly when I meet with community banks, they'll tell me whether it's a commercial lender or a business banker, or maybe it's even the branch representatives, when they're doing business accounts, they're often opening it at the branch, or face to face. Maybe the business banker is on site with the commercial client, kind of taking a request, but then they'll send the docs later on, the signature card and other things, and maybe they're doing it with an e-sign provider, or maybe they're actually making the business owner come into a branch, and then a lot, emails or phone calls, things like that. And then certainly around treasury services, onboarding those, I see commonly that's a whole nother kind of series of things downstream. What's interesting about that is I happen to own a a business. It's not anything really special, but I have a LLC that to hold just a small rental property that I have. So little small time commercial real estate investor here. And I sold the property recently, and unfortunately, the buyer cut a check in the name of the LLC, and instead of to me, or at least with me allowed to sign for it. So as a result, I couldn't deposit it in my personal checking account, and I have never had a business checking account because I didn't really have a need for one. I just had one property with an LLC, and whether I should have probably, but I never did. And so I had to open a business checking account. I figured this is a great opportunity for me to do some research and development for what we sell. And so it was a fun little trial. I went to tried to find a variety of community banks and really couldn't find anybody that allowed me to do it online. And then I went to some of the big banks. So I looked at Bank of America, Wells Fargo. They also did not allow. Oh, I think Wells did. And then I finally decided I was going to stick with Chase. So I went to Chase and started the process. It was a really easy experience. It took me just a few minutes to start filling out the application. And I knew generally what banks require for commercial account opening. So I kind of had everything ready. And the LLC happens to be owned 50-50 with myself and my wife. And so, but it's my wife. It's not really a big business. This is a small rental property. And yet when I get most of the way done the application, Chase says, wait a second, it's not a sole member LLC, so you have to come into a branch. So this is a rhetorical question, but any guesses what I did? I said, I'm not banking with you guys. So they lost a customer. So anyway, I decided to go with a different bank that ultimately did allow me to do it fully online. What's interesting as we think about abandonment, though, why do people abandon? It's often because there's friction in that process. And IT Group has come out with a pretty interesting survey. 65% to 95% of commercial clients abandon the application process, depending on the product line. But that's talking about in a non-digital or non-online kind of channel. But even on online, Chris Nichols, who's a chief strategy officer at Center State Bank, heard him speak many times. He's a good thought leader kind of in the community bank space. It talks about this. Studies have shown that even online channels, 40% of applications are abandoned. So something's still not kind of meshing. And what is that? Well, the number one reason that folks abandon online applications, no surprise, is it took too long. And of course, the second is also interesting. Too much personal information was required. And then, of course, it kind of goes down there from there. No surprise, the percent goes up relative to the time. What's also interesting about this chart, though, is that some of these applications take over 60 minutes to complete. And that, I think, is indicative of the general approach. And we'll come back to that in a moment. What's interesting is that the positive experience of customers is actually goes up online until it's about 10 minutes. At the 10-minute mark, there seems to be this pivotal moment where customers start to feel less and less positive about that digital experience. Another item to consider is that even then, certainly a large majority want to be able to do it online, and they're more likely to apply if it's online. But there's still certainly a subsegment of the market that is neither more nor less likely to apply online. And I think this is actually a silver lining and actually a great thing for community banks, kind of reiterating that message. Typically, community banks have great relationships with their clients in their markets. They know their customers, they work with them, they they have really good customer service from the face-to-face. So if you take that aspect of it, plus the ability to have an online experience, I think we'll find that community banks will actually, just like on the loan side, outperform the large bank peers in their markets on the deposit side as well. Back to then the real kind of so what, I think Chris Nichols again says, well, why do these online applications abandon? It's because of an ineffective process design. And what does that mean? Well, we'll go through that here in just a moment, but ultimately we as bankers commonly think about it like, what do I need to get? I need to get this information for KYC. I need to check on fraud, and I need to do my AML process. I need to do this, and this, and we're not putting ourselves in the shoes of our clients in terms of how we design our online application process. So before we talk about kind of some of the keys to making that a successful online application, I want to open it up back up for the polls again.
All right, launching the poll now. The question is, what is the average turnaround time for customers to open commercial accounts? So give it a minute here for everyone to respond. Just a few more seconds for any more responses. All right. I'll share the results now. Seems more than a week seems to be the significant percentage, Peter.
Interesting. And that's a pretty common experience from what I've seen as well. Certainly, a lot of clients I meet with, when we first talk about how long it takes them to get commercial accounts open, they'll say, hey, maybe it takes an hour or two, or maybe sometimes a little less, depending on kind of what they have set up. But generally what they mean is the deposit account itself. In reality, for commercial clients, one of the key differences certainly between retail and commercial is going to be not just the account itself, but the treasury services related to that. So whether it's ACH or whether it's wire services, whether it's RDC or a variety of other components there. So let's talk a little bit about then what some of the key principles around creating that exceptional customer experience, keeping that turnaround time really fast, and making sure that we can reduce the abandonment as we go, especially as we go to an online kind of account opening perspective. So one of the key things that studies have shown that reduces the abandonment is minimizing the information. And we saw that on kind of some of the stats on the flip side with, that's one of the key reasons people leave. So some of the principles that these studies have found is that if you collect the easiest information first, and then as it progresses, capture more stuff that's maybe a little bit more time consuming, that actually helps the person, because it helps them feel like, yes, I can get this done. I know what I'm doing. Another key area though, and this is commonly when I talk with banks as we implement our solution, we'll talk with the team and they want to ask all these questions that may or may not need to be gathered. They're extraneous information, or maybe at one point they were necessary. But studies have shown that ask only the necessary information. So what is the minimum amount of information that we need to give excellent service and open it as fast as possible? And there's a third one, which is kind of a funny one, is reduce scrolling. Think about all those forms that you've filled out, even if it's digital, it's a PDF, it's a fillable PDF maybe, where it's a 20-page document and you have to scroll through it. What's interesting is, as consumer habits have changed because of devices like this, a smartphone or even tablets, folks are redesigning how web applications work, and often it's swiping to the left or right. It's a progress left and right more than scrolling up and down. And that certainly has been shown to make that customer experience feel more streamlined, and also therefore reduce the abandonment. One of the other key things is about document gathering. I think for most business owners, the biggest challenge is not who am I and what do I want. I mean, most of us would know that. I'm XYZ company. I have this address. Even if it's more BSA related questions like, do I do internet gambling, or do I live in a foreign country as a signer? We know that information as customers, but in terms of documents, we may not have those handy, especially if we've never opened a commercial account before, because the list, of course, on the commercial side is much larger. So case in point, whether it's articles of incorporation or partner agreement for the businesses, whether it's of course the photo ID for the personal side, but also things like beneficial ownership and a variety of other components that are necessary. And then when you add treasury services in the mix, as we know, OCC requires underwriting for ACH. And so depending on the bank's credit policy, you may require a PFS, a personal financial statement. You might require business tax returns or other things like that. And the client may not have opened a business account before and may not know that they need to have those documents. So what abandonment surveys have shown is that you want to provide a kind of a roadmap, a customer journey up front. You want to give them a list of what to expect, which would be both, hey, you need to fill out some profile data, you need to tell us what you want, like a checking account, a savings account, whatever, but also give them a list of the types of documents they're likely going to need, so that when they get to this stage, they can do that. But also, and this sounds obvious, but allow them to upload that digitally. Can't tell you how many folks I've talked to where they may even have some sort of online account opening application, but then the way they gather documents is the business banker sends an email and asks for those independently, or they sometimes, I've heard, they even force the customers to bring them to a branch. So make that part of the application experience, because that's certainly for the business owner going to be the most time consuming place. The last one I'll talk about here briefly is then about the things that we know we do need to do. And I already mentioned beneficial ownership briefly, but it's also things like all the T's and C's and signature card and things like that, where commonly what's happening is those disclosures are thrown into a big PDF package and either wet signed or maybe electronically signed with Adobe. But with disclosures, we can throw those into the application. Think about the common experience when you're signing up for Netflix, or you're signing up for Facebook or whatnot. They'll have all their terms and conditions, and you can quickly scroll through them and say, I accept. And that's become such a common practice. I was working with a bank that about a couple weeks ago that was questioning about what does it mean to even assent digitally, and ultimately their legal staff said they decided they'd feel comfortable with all the disclosures and a checkbox saying they certified this, and this is in essence their digital signature. And that's something that certainly has shifted with the industry, but that makes a much better customer experience. But also, even if they are signing it electronically, let's try to do anything we can as easily and streamlined as possible. So case in point, if I'm opening a personal account, maybe I need to have myself and my wife, or a parent and a child. But with a business account, it's very common and likely you might have 5 or 6, 10 different signers. So as part of your process, it's really important to make sure you have an automated way where it can easily distribute all the necessary signatures to all the right people, and then bring it back together to produce the final documents, so that it's easy for the client, where the customer doesn't have to print out a bunch of docs, walk around and get signatures and scan it and send it back. And that's kind of to this then point, a lot of times we think, well, we throw a web form out there and that's a digital experience, but there's so much more to opening the account and than just putting in some basic data. And then there's obviously, of course, providing documents and documentation, but also signing the docs and all the rest of the process as they onboard, setting up online banking users and things like that. Let's make the whole process kind of from end to end digital. The final thing, especially with commercial, is it's not gonna be a 10-minute process. On the retail side, ProcessMaker's retail account opening generally takes, somewhere between 7, 8, 10 minutes to complete. And that's kind of from start to finish. But with commercial, there's just so many moving pieces. And even if it is online, it's very common that a business banker has to sit down with that client and talk through treasury services and really tailor that to the particular business. So if it is going to be a process that takes some time, keep the customer informed. Obviously, that's something you can do with the phone. There's absolutely nothing wrong with that, or even stopping by and seeing the client. But let's get a system, a process, a digital application that really keeps that customer informed automatically as well. And one final thing, it's a really interesting one. This one is such a small thing, small detail, but it's been shown to reduce abandonment by about 10%. And that is a save and return, or save and exit, save and come back later button. So if you do something digital, make sure that you have the ability for the client to save and come back later. And what that means is they need to have a secure portal. They need a place where their PII, their sensitive private data, can be stored securely, and they can always come back and finish the application at a different time, or go get that document that they didn't know they needed and come back and finish. The last thing, though, I'll finish on is not from the digital side, but back to the whole concept of this community bank, kind of bank local concept. At the end of the day, almost 50% of customers still want to talk to a person during this process. And so the goal with making things digital and making them online is not to replace relationships, it's rather to enable them. The real goal is to facilitate an easy way to do administrative things you have to get done, so that you can have that personal relationship. So imagine this scenario. When I talk to a lot of clients that are implementing our solution, I highly recommend this. Imagine a customer starts an application and the system tracks that and sees that maybe after 2 hours they didn't finish. Let's put something in that workflow that automatically escalates that to a business banker who has a task assigned them to call the customer. Silly little things like that can make such a big difference to the customer experience. So the goal of going digital, especially fully digital, is not to have no human contact. In fact, I would argue it's the opposite. And that's where I think community banks, not only, just like on the lending side, where they're compared to their market share, they outperform the big banks on the lending side, but on the deposit side, not so much. I think it's the same opportunity here with commercial account opening, where and commercial deposits are, especially the core ones, are so critical to the earnings and lifeblood of these community banks. So that's hopefully gives you guys some ideas as you think about going digital with commercial account opening. I'd love to open it up for any questions for myself or for Ted from Nextsoft, and thank you everyone for your time.
Awesome. Thank you, Peter. If there are any questions on the presentation, feel free to submit them through the Zoom Q&A function. So we have one question about ProcessMaker and what we do.
Sure. So ProcessMaker, as you'd expect, is a process automation solution. So it's ultimately at our core, we have a process engine that automates various different tasks. But what that ends up looking like then is we have a commercial account opening solution that is kind of an omni-channel approach that allows both, whether it's in branch, face-to-face, or fully online, and then ultimately not just the deposit account itself, but also any of the treasury services and onboarding those as well.
Okay, and I have another question related to connecting to core systems and how that relates to Nextsoft and ProcessMaker.
Yeah, this is Ted from Nextsoft. So, we have a standard API request that we receive from ProcessMaker. It is interpreted by the Nextsoft software. We have intelligent rules built in based on every core. We understand what the core requirements are for each individual core. And we evaluate that, we translate it, and we load it into whatever core's middleware that you are utilizing. For most cores, this can be done real time. It all depends on that core and the functionality that they provide. Even the ones that are not a real time and that deposit's not immediately activated on the core, there's always a memo post option. So, minutes after an application is completed and approved and received by Nextsoft, there is at least a memo post out there on the core showing that a new account has been originated. So if someone looks at the CIF record of that customer, they would see that there was a brand new deposit account open that day.
Thank you, Ted. Anything to add to that, Peter?
Yeah, no, I think the key there is certainly we're very happy with kind of our relationship here with Nextsoft. Our expertise is really in the web application and kind of process automation side, where, as Ted knows and all of y'all know, whether it's a Fiserv, Jack Henry, a FIS, whatever, there's so many flavors of core systems, and there's probably 40, 50 different providers, and that's even within Fiserv itself. There's Fiserv Premier, Signature, Clear Touch, et cetera. And so we want the experts to be the experts at what they do. And so that's really, they know with hundreds of different banks that they've worked with over years, exactly all those different dynamics for each core system. So when we pass over kind of our standard integration to them, they do all the heavy lifting with interpreting that based off of whatever core system the particular bank uses.
All right, thanks, Peter. We don't have any other questions, I don't believe. So thank you everyone for attending. We will be sending a follow-up email with a recording of the webinar to everyone that registered. Thanks, Peter. And again, thank you, Ted, and everyone else for attending today's webinar. Have a great day.
Thank you.